Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, January 8th. Okay, don't forget today we've got the December jobs report. That'll be coming out at 8:30. From what I gather, a lot of people are thinking that number is going to go negative. Net job losses as the COVID virus, dug in harder with a lot more infections and, rippling through the economy at a greater degree than in previous months. So we may be in for a negative print there. I don't know how much is baked in. We'll just have to see. I think, the jobs report has basically been a rear view look at things, and I think the market's been looking forward. We've had quite a bit of negative news, especially in the fourth quarter, of things slowing down. But with the vaccine, I think the market's looking forward to when people are going to be getting vaccinated and getting more out and about. So we'll have to see what that print is and what the market reaction is. But I think the market's been shrugging off a lot of stuff and looking forward. So we'll see if they ignore it today or how it comes in, how it plays out. Also today, don't forget, it's Lottery Friday if you're into that kind of thing. If you can catch a good runner, you can get some very cheap options if you catch the right stock, if the stars all align, and get something either running hard to the upside or collapsing. There's some money to be made that way, but that's all active trader stuff, and kind of if you got your eye on the right thing at the right time. I wouldn't spend a ton of time on stuff like that. I think it's better to stick to the bread and butter trading that you're comfortable with. It's just something, if you can catch an Amazon or a Google or really any other name that you're knowledgeable about, it can be a nice capper to the week if you can catch something. And I never go big on that kind of stuff. Just something cheap and fun on a Friday, just like, more or less a lottery ticket. You don't expect to win, but when you do, it's fun and exciting. So you can afford yourself that, especially if you've had a good week. So anyhow, let's get into it. Let's run through SPY and then run through the FANG names. Yesterday was significant. Why? Because we recaptured this big breakdown candle from Monday. And when you're doing your candlestick analysis, whenever you've got, we made note of this big bearish engulfing bar. Normally that's the start of a trend change, or it can be, and you want to see follow-up selling as a confirmation of that. We never got that. We had a red to green candle on Tuesday, and then Wednesday we made more progress higher, and then yesterday we took out the top of the breakdown candle. So it's been fully negated now, and we've actually gone from the bottom of this rising channel and breaking out the top side. We do have a little gap here below 376, but the bulls ate it up. I mean, it's as simple as that. Going forward, keep an eye on PPO. We've got this high-level bull cross, positive bull cross here, working. If this can execute and have RSI break out of the top side of this resistance line here, we could be set for another run next week. And remember that next week is January OPEX. So usually the OPEX week is bullish. So we may be setting up for a real nice week next week if we can get a bull cross here, get an RSI breakout, and continue to make progress higher. On the 2-hour chart, we can see even better how this was the big breakdown Monday morning, and then we've just made steady progress right on through. Gapped up yesterday. Here's that gap, and just made more progress. So looks really strong. PPO made a big move, taking out these highs, working on taking out this level, and same thing with the RSI. We've got a breakout here. So on the downside, today, if there's some weakness, if you get a pullback into the top of the gap support and the prior high at 376, I think that's an objective long with your stop just below inside the gap, where, if more selling comes in, you're going to want to, get out of your long and probably go short for a gap fill down towards 373. And here we see it bigger, zoomed in a little more. I've dropped in a trend line off of the lows here. You can see that yesterday afternoon, once the initial surge was done after the first hour and a half of trading, we just consolidated, within that range between, 379.50 and 378.50. So this looks like a big bull flag. I didn't draw in the flagpole, but, coming down here from 374 up to essentially 380. So if you moved, if you did your projection, you move your flagpole over here and extend it up, it's going to be in that 382 range, 382, 383. So that could be in the cards. What would negate that would be, if we dropped out of the flag and then came down here, broke this trend line, and then back in towards this gap area. So here are your support levels on the downside. You got the bottom of this consolidation range at 378.50. Then you've got this prior high at 377, and then you've got the top of the gap at 376. So on any kind of breakdown, those would be levels to look for a entry long. And really, the only short I see here is if the top of the gap does not hold at 376. I think you can get a fairly quick move to fill that gap down to 370, 350. So that's a $2.50 trade there. That's worthwhile taking a look at if you get it. Qs are right up to the top of that breakdown candle high. You see it right there. We actually stopped right on a dime there. Futures I looked at were up a little bit this morning, about 0.4%. So if that holds, we will have taken out the breakdown candle high and then moved higher. So at the end of the day, just looking back on the week, this was a fairly scary candle, big sell bar day. But the 20 held, and the bottom of this rising channel held as well. So, the bulls remain firmly in control. So continue to look for long entries, and let's not try to get cute and try to, keep shorting the high. That hasn't worked for a long, long time. So when you get pullbacks to objective areas, those are places where you can look to get long. And notice that price, above the 8 and 20 day, above all the moving averages. So that's as bullish as it gets. So let's not write off tech just because the, cyclicals and value stocks are doing well. From what I can tell, this is a very broad-based rally, and at least to this point, they're not bailing out on, tech to go into other things. Just I think more money is coming in, and there may be some relative weakness within tech, but not to the point of actually going down. It just may not be going up as fast as the other stocks, like within IWM, etc. We'll see that here in a minute. So here on the 2-hour exploded view, really nice support in here at 307.50. We had the gap higher and then moving, up towards taking out 312, taking out 314. So just a nice strong move yesterday. Bull cross here on PPO and moving up into the green area above 50 on the RSI. 30-minute chart, just dissecting yesterday. If you were, actively trying to trade the cues, what were your buying cues? Well, number one, we had the gap higher. That's always going to be a bullish sign. Then you had the recapture of 310.50, which was a line we had, on the charts already. That was a buying opportunity. Could have got long there with an initial buy. We had made note yesterday of the big resistance here at 312. That was taken out also on the first candle. That was another place to buy. We also had this large volume over price resistance at 313. And price didn't even hesitate at all. So that was another place to buy. And then your final place to buy was taking out the top of this trading range at 314.25. Now, it poked above and came back below, depending on where you put your stop, of course. You might have been stopped out there, but then you could have gotten back in as it popped above 314.25. So that would have been, a whipsaw signal if you were actively trading that. But if you remain nimble and open to the price input, you could have got long there and got another, 75 cents or whatever out of it towards the end of the day. So as it stands now on the Qs, I think any pullback into 314, that should be bought with a stop just below, and then look for higher prices later in the day. IWM remains super strong. Just this week, let's call it 193. We're up to 208. That's $15 just this week in IWM. Just a phenomenal move. Even looking here to put in another bull cross higher. You can tell here, overbought, can remain overbought for a long time. That's his whole run. So that's been incredible. Looking at the 2-hour, here's your little gap from yesterday morning and then on up. Stay long, trail your stops in case there's a reversal. Here you get a little bit better picture of what's going on. Here was the opening surge, and then a lot of consolidation after that. You can, again, imagine this being a bull flag with your flag stick here down to 204. So 204 to 208 is $4. $4 on to 207. Your projected move would be 211 in that case. So you can use 208 as your level to shoot against and look for a $3 move higher. And, I think you can stay long against, depending on where you get in. I think if price pulled back into this box to 207, I think you can get long there, and then with a stop just below. If it rolls out of this flag down here, I think you're going to come into 206 right away and probably, see if it wants to fill this gap here down to 205. But if you got a move back into 204 that were to hold, I think that's a good long entry. Really the only short setup that I really see, if you want to be really nimble, you can short into this gap. If it looks like that's going to fill and maybe get some follow through down to 204, but I would certainly be covering anything into 204, looking for that to hold and then for a ramp back higher. Now, I think just looking at all the scenarios, if 204 here were to break, you've got a big air pocket here because of this big surge. If you were to get a break of 204, that is a place where you'd want to be short to try and get a move back to 200, even 199 in this gap. And if that starts rolling downhill, I wouldn't be surprised if this gap filled. But I think that's an outside scenario, one you need to have on the board as potential, but look for places to get long, not places to get short. I mean, this has been the strongest index of the three the last, month. So look for long entries, not short. But if you did get, this short served up on a golden platter, silver platter, you can get short against 204 and then look for a move down. But like I say, I don't expect that. Facebook remains weak. Did have this surge yesterday. And I think here this morning you can use 270 as your bull-bear pivot. If price were to pop 270, you can get long and look for 273.50. If it remains weak, I think your buy point would be down here at this 266 level. And then if 266 were to fail, then you may have a short down here. But, I mean, all of the FANG remains pretty soggy except for Tesla. Apple yesterday, I put out that late day note. Apple had a pretty nice move yesterday. Was up $4, up off of the deck here. I don't have it drawn in, but there's a gap here. I need to put that in here from the open up to this 128. But yesterday, you had an objective buy on the takeout of this downtrend line, and then on the recapture of 131. Just a personal preference if you wanted to take that, and hold it overnight, or here this morning, if you wanted to get long against 131, I think there's certainly potential there for a run to 134. You can see that this was pretty nice support back here, and then it was nice resistance in here, and that makes this 131 an important line of support and resistance. So that is your pivot, 131. Anything above, you can be long, and anything below would be more or less a rejection of that, and then look for it to fall back towards 128. I mean, Tesla is just gone. I mean, that's the only way to describe it. I've dropped in a little trend line off of this low. I mean, looking back on it, the bottom side of this channel was a gift. I mean, that's where you're supposed to buy. You could have had a objective long here. These have all been objective longs. Back here, back here, back here, back here. This rising line has held the whole time, and then since the end of the year, it has really accelerated and putting in a big leg higher, going from 660 to 810 in just a few days, and it looks to even be putting in more. So if you're looking for an entry, what you want to do is on weakness, any pullback into 780, right in here would be a place to try a long. Really strong. Microsoft, gap up, recaptured this 217.50, which is bullish. That is your bull bear pivot, 217.50. If you got a pullback here, I'd be looking to get long. If it breaks higher from last night's close and recaptures 220, that would be another objective long location. And you know how I feel. I mean, right here in the middle of the range, that's a difficult place to, do anything long or short. I always like to wait for price to find either an objective level lower or an objective level higher. And that way you've got a much closer line to shoot against, whether you're trying to short it or looking for a breakout here of 220. So for me, 220 and 217.50 are your objective levels. Amazon yesterday was really interesting. Had the gap up, gave you a nice opportunity right here. Let's see, what was the low? The low was 31.55, and we had 31.50 as an objective area to get long on a recapture. So if you were okay and you were really nimble and quick, you could have gotten long, in the mid 31.50s against 31.50. So you had $5 a risk, maybe $8 a risk, $10 a risk at 31.60, and you got that move up to 3,200. In the trading room, I'm calling it the free 50 club. Getting $50 moves seems to be the norm. And once it stalled here at 3,200, just like we've been talking about, that would have been a place to, cover your long if you had gotten long here and then tried to short against it. And then you got a flush at the end of the day that gave you $40 back to the downside. So that was almost a $100 move during the day. So Amazon remains, pretty weak, and just, continue to use these $50 increments, 31.50, 3,200, as pivot points. They've been working pretty well, and, traders keep doing what's working. Buy support, sell resistance. You'll eventually get stopped out or a trade won't work. But, at this point, they have been working. Here 32.50 failed. It was support. 32.50 failed. And there you got a $100 move. So it's not the easiest one to trade. But if you're comfortable with it, there's certainly money to be made on these $50 moves. Google had a nice day yesterday. Broke out of this downtrend line and gave an impulsive move higher, recapturing 755. And again, to me, this looks like a big bull flag. Here's your flagpole, consolidation. And if we were to extend this pole and do a measured move, we're going back to the top of this trading range, up to 1795, 1800, and possibly beyond, because this was a very impulsive move higher, and we actually broke out of the flag yesterday afternoon. So that looks good. If you had this morning, if you pulled back into 1720, oh, that's not right. What is that? 65 or 55, 65, 1770. Apologies there. If it pulled back into 1770, that would be a place to try a long. If you got a pullback all the way into 1755, that would definitely be a place to try a long at this mid-range of the midpoint of the trading range. So now it's definitely in the bullish side of the trading range, and I'd be looking for a move back up to this 1795, 1800 range. Netflix was pretty soggy. Made a little run up here to the gap where it got rejected and then came back down. So nothing really happening there. I think your key points this morning are this 306 area and then this 513 area here where the gap is. So I think, on a relative basis, FANG has been, or FATMAAN, including Tesla. Tesla's been the obvious standout. I think if you have been actively trading the FANG names, Facebook, Apple, Amazon, Netflix, Google, it's probably been a little bit frustrating. I mean, it hasn't been a gravy train like it was for a while. And I think at that point, you need to decide if you're just going to take what the market can give you or move on to fertile fields, other fields where you may be able to find more juice. What you don't want to do is take these names and jack up your position size so you can, make the same amount, in your own mind, make the same amount of money. If it's moving less, you're going to buy more. That's a recipe for trouble. Keep your position size the same. And if you're committed to trading, actively trading the FANG names, that's fine. But keep your position size the same. You're just going to have to settle for, things not running wild like they were in the summertime. And if you find that frustrating, don't trade them. Just wait. Or look for other options, maybe in the EV space or in the commodity space. Things that are a little bit more lively, and you may be able to get comfortable with some of those other names while FANG consolidates and gets ready for another push, either higher or lower. They're definitely in the consolidation mode still, but set your alarms. Set your alarms on those stocks at the levels where you want to become interested again. Don't just completely forget. I'm not going to let you forget about them because I'm going to keep reviewing them. But, you don't want to miss a big breakout because you didn't have it alarmed and you were, trading some other instrument. So let's leave it there. I hope you've had a good week. Let's finish strong this week. And let's see what the payrolls number has to say, and more importantly, the reaction to it this morning. Futures are modestly green. I did see where gold and silver are getting whacked, so I've been looking for those to go higher, but on a much, more expanded time frame, buying leaps out in January 2022. So, anyways, let's wrap it up there. If you're new to the channel, I hope you found the levels helpful. There's one thing I think very well is find the levels. And if you trust those levels, you can focus on your execution of your trades in and around those levels. And I think, if you can trust my technical work, that will open up some bandwidth for you for focusing on execution. I know that's an area where I can really help people. So if you're new to the channel, please hit the subscribe button and the alarm bell so you won't miss any of my content. Also, jump over to the show notes where you can register for all my content there, and you'll get an invite to the trading room as well. We've had several new members this week. I want to welcome you. I thank you for spending the time here with me mornings and during the day. I really appreciate that. I hope you're benefiting from the work. And yeah, so I look forward to having you join in the team. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you later on. Thank you.